Now, oil marketer KenolKobil posted a profit amounting to 19.7 million US dollars for the year 2015. This marked an 85% improvement over the 2014 period. Now, KenolKobil attributed the dramatic increases in profits to a reduction in debt and other measures such as selling off underperforming assets. Volume in 2015 grew by 13%, while sales revenue dropped by 4%. Now, this drop was due to the ongoing global oil glut, which of course has resulted in a drop in crude prices. KenolKobil additionally experienced Forex losses amounting to 2.2 million US dollars, attributable to a drop in the Kenya shilling against the dollar. Now, we are joined in the studio to give us the story behind the numbers. We're joined by David Ohana. He's the CEO of KenolKobil. Welcome to the studio, David.
Thank you. Good evening.
Now, of course, looking at your numbers, 2015 profit hit about 19.7 million US dollars, but we did see sales were down. Now, how much did the sale of your Tanzania and DRC assets impact these numbers? And of course, give me a sense of what were the growth drivers this time around.
Yeah, the growth drivers were mainly the inventory management. You know, we were in a year that oil prices were crashing all the way down. So whenever you keep high inventory, you know, when the government changed the oil prices in the pump price, then you'll be hit. So we managed to control our inventory properly, and it was the main driver for these amazing results. Tanzania operation and the DRC depot that we had, they were challenging operations for us, mainly on level playing field. We couldn't compete with indigenous oil companies locally, so we decided to divest. It contributed to the bottom line, but not. It was a small amount relatively to the great results.
Now, when we look at your expenses and your borrowings, they came down significantly in 2015. How did you manage to sort of mitigate those costs or manage those costs in 2015?
Yeah, we are very proud about the borrowing levels. We are actually 3 years working on this reduction of debt. Treasury management became a big issue. I'm involved on a daily basis wherever I am, traveling in all the countries we are operating. So we took it very seriously, and we proved that when you deal with something, you can get it right. So yes, we crushed the finance cost. I believe within the year we'll be debt-free, and we'll stop borrowing neither USD or Kenya shilling, and by that the P&L gets much healthier.
Now, going forward, what is your strategy for 2016? Are we going to see you managing costs more? Are we going to see you trying to expand maybe further out of East Africa? What exactly is your strategy?
Yeah, in our commentary, I mentioned that we took over 21 service stations in our group within 2015.
Right.
So yes, expansion will be there. Not the way we were doing it in the past. We are doing a growth which is more organic growth.
Right.
So we'll continue growing, and it's a culture now in KenolKobil. We always manage costs. You don't manage costs.
Well, tell me a little bit more. What areas of the business are you looking to grow going forward?
Mainly service stations, LPG, non-fuel business, and lubricants. Those are the high margin segments that we were talking over the last 3 years, and we are really focusing on that. We launched the Castro lubricants not long ago. We are going to put LPG facility in Kisumu. So all those high margin yields will strengthen the P&L within 2016.
And very quickly, there are oil finds in Turkana and of course Rift Valley. How will this impact your business, if at all it will?
By the way, you know, I'm a downstream manager or running a business which is a downstream. Personally, I don't believe in upstream business. You know, it's up and down. I don't see anything coming soon. It's not going to happen in Kenya soon.
Okay.
It will take us a few years.
Okay, well, thank you so much for joining us in the studio. Of course, David Ohana, the CEO of KenolKobil.